Testing 1 2, testing 1 2. All good, yeah? All right. I just thought the audio was messed up for a second there, but if you can just give me a quick confirmation that you can hear me in the chat and you can see my screen, just give me a thumbs up or a confirmation in the chat and we'll kick off the stream. Yeah, all good. Thank you very much. So thank you once again for tuning in. It's the 22nd of December 2024. What a week we've had in crypto, right? And across the board, JP nuked the markets. Or did he? Or was it just a lot of bad positioning in the market, which has kind of got unwound? Okay, so I think we've got an interesting week ahead. I'm not really expecting too much, but we'll jump into the markets. We'll primarily cover Bitcoin, Ethereum, Solana. We'll look at the totals and hopefully we'll wrap it up. So before I proceed, just a very special thank you to Prime XBT for once again sponsoring the live streams. As always, anything said in today's stream is not financial advice. It is just my view of the market. Before I proceed, I did mention, for those of you who are aware and those of you who are not aware, that I will be running a free private group in January for around 4 weeks. If you haven't signed up, don't worry. If you've signed up, just bear with me. I will announce further details during the very first stream of January, and we'll kick off around about the 5th or the 8th or the 10th of January. I'm just in the process of moving locations, so priorities take precedence, and but not to worry, we're going to cover some really good information. And like I said, you know, I'm not asking for payment of any type. All I'm asking for is just to show some support with the partners, OK Exchange and Prime, signing up via the ref link. All proceeds, any commissions earned will be going 100% to charity. So it's just something that I want to give back to the community. I'm not looking to benefit or monetize any such referral incomes for myself in that capacity. Right, that's the formalities done. Let's kick off and look at the charts. Starting off on the higher time frame, how to sign up? Don't worry if you haven't signed up. I will give you more information on the very first week of January, the very first stream. I'll leave a form there, or potentially the website will be up and running. All the steps for registration will be there, okay? And if there's any issues, you can reach out to me. You can fill in a form or support, contact support, and we're trying to get the issues resolved as best as we can before we go live. So I wouldn't worry too much. Just enjoy the Christmas period with your family and friends and enjoy the current shit show in the market. So let's kick off. Bitcoin, what do we think? First question I'd like to ask you all. Probably on the back foot, but how many of you think the top is actually in here? Who's calling for a top on Bitcoin? Or is this just a corrective phase after what has been an extensive move up from 68,000 to almost 110? And now we're getting the first significant pullback. And it's amazing, really. I think when you look at Bitcoin overall with the trend scanner, considering where we've come from, we've broken out of the range, we've expanded to the highs of 108, and we're currently trading at $94,000. It doesn't look too bad. But when you look at altcoins, that's another story. It's another story indeed. I'm just reading through the comments. Some interesting feedback there. Top is in, top is not in. Some people are calling for 250,000. I mean, eventually you'd like to think Bitcoin goes to 250K, right? Yeah, interesting. My opinion is I'm not sure. I don't want to call the top. My job isn't to call the top. My job is to evaluate risk, and I'm going to cover that on today's stream. Kind of a segue as to how I may potentially play the market in 2025, and just looking back at what I did during this corrective phase in 2024 and why I was reluctant to short the highs, but how and why that may change during this current phase of the market. Okay, so we'll cover that. But let's just kick off. I think first things first, when you look at the move on Bitcoin, you look at the 12 and the 25 EMAs, it's not too bad. We've still got the weekly close, so you know the EMAs will change after today's weekly close. So I think overall, if you look at price here, in terms of significant support, the 12 weekly EMA is trading at around about 86,000. Now you've seen many people tout on the timeline this figure of $85,000 on Bitcoin has been a good opportunity. Maybe that level gets front run, maybe it doesn't, right? But either way, we're coming in, if this does start pushing up at the start of the week, into that 85, 87 level. So just take note of that. Okay, we're talking about purely trade setups based upon the higher time frame. That 85, 87 mark is a level of interest. When you look at the daily, you can see that the bands are starting to compress. So this indicates to me, now that there's two ways you have to think about this when it comes to using moving averages or a set of moving averages. And again, this is what I've learned over the last 12, 18, 24 months. The subtleties, and this is very, very important. It's understanding the subtleties of what price is doing with the bands. Don't just use the bands as, look, there's a death cross or the bands are bearish. That's not good enough, okay? What you have to think about is what is price actually doing at the bands, okay? Where's the next logical level of support? And the third point is price likely to come, even though we may get a death cross on the 1225, is price likely to remain compressed under the bands and then break back above? And then if that's the case, it probably more than likely trades back to the range highs. And I think that could be the case, that we are in the process of developing somewhat of a range bound environment. It's very difficult to tell at this stage whether this is likely to be trend continuation or whether this is likely to be a range bound environment similar as to what we saw here. And another example, a short-lived range during this phase here. Okay, the trend continuation aspect would be something like this. Okay, so whether we get a deep correction like this, you can see you get the sell-off, it makes a lower high. It can give you the perception of this is potentially a lower high before we see a lower low. It's easy to get caught up in the fact that the top is in, okay? You don't really know when the top is in until after the fact, and when it is, you're looking for weakness on a consecutive series of lower highs or a significant swing fail after an extensive rally like this. Look at all this inefficiency. Price pulls back, another drive, price pulls back, and another drive. What do you have here? 1, 2, 3 drives pattern. Exhaustive, probably get a bearish divergence on the RSI and price sells off. Extensive sell-off, then you get a lower high for several days and it just cannot continue pushing further, and then you get the extensive sell-off to the downside, okay? So the point I'm trying to make here is it's not just about the 12 and the 25 or the EMAs or whichever set of moving averages that you use. At this moment in time, I couldn't tell you whether we are likely to print a structure like this or whether we are likely to see a continuation structure like this over the coming weeks. Now, the key to that, it doesn't really matter for me whether we're going to play this type of structure or whether we're going to play this type of structure. That's irrelevant. It's good to know in the back of your mind, but is it truly actionable? There's no point in drawing a scenario where you think there could be a 3 drives to the high, because that doesn't tell you how you're going to position to the trade or what your position is going to consist of. So what's more important to me is, first of all, understanding what are the levels that I wish to buy Bitcoin at, the levels that I wish to trade Bitcoin at. Then I can watch for the development of the structures. All right, are we going to trade to the range highs? Is it then going to reject and come back down to the mids? Do I hedge? If I hedge, where's my stop? Am I willing to get stopped out on the hedge? That's fine. So there's various different scenarios that you have to have in mind. You've got to be fairly fluid. You always have to be open-minded to the fact that what's my downside risk, okay? I know it's all well and good people talking about, yeah, Bitcoin's going to go to, you know, in the next several months, it could go to $180,000, $200,000, right? That's all well and good. But what if it doesn't? Equally, you're going to see people calling for, just as you saw people calling for price at this level to pull back into $40,000, $30,000. And there was talks of bearish market structure because we had lower lows and lower highs, lower lows. It doesn't matter. Don't marry yourself into one particular bias. And like I've said time and time again, what really matters is where you want to execute your trades. Get that part right. Give yourself a chance to be in position and understand at what point you're wrong. And when you're wrong, get out of position very, very quickly. And that's the best you can do, okay? You're playing a game of probabilities. You're not playing a game of prediction. So the very first question I asked you, where's the top? Is this the top? And my honest answer is, I don't know. And as much as I'd like to be bullish, and I want to continue believing that Bitcoin can potentially trade higher over the coming weeks or months into Q1, I also have to be cognizant of the fact that, well, what if this is the general range of Bitcoin? What if this likely is to be a corrective phase of distribution where you get a pullback, a spring in phase B, you get another rally, pulls back, and you get a final up thrust, UTAD, and then that's all we get. And again, you're going to see a 1, a 2, a 3 drives pattern. But it's no good me telling you this because this is not actionable information. This is great if you're looking for clout on Twitter or social media, or you just want to call yourself an analyst and take a wild guess as this is what could happen. But the honest truth is, I don't know what's going to happen. All I can tell you is that as a trader, I'm looking to react as to where the market is likely to trade, which are the levels that I'm interested in. And long story short, let's get straight to the point. I think when you do look at these corrective structures on Bitcoin, here's one example. You got 1, 2, 3 drives to the high, extensive sell-off. Okay, from 73 down to 65, consolidated, and then it took another leg down, okay, into this demand zone before price rallied back up. So the point I'm trying to make is that I do feel that this, let me just take off the macro trend scanner now, that this level here is certainly a level of interest, this weekly block. Not only do I like this level, because if you look at the range, it's coming in at around about $90,000, and the low is in at around about 86, 87s. Recall what I said as to where the 12 and the 25 weekly moving averages, it's starting to push up into that zone that I've just marked out. So that's point number one. That's certainly a high time frame zone that I certainly want to see a reaction from. What do I need to see? I would like to see potentially longs being liquidated into this level. The second factor that I'd like to see on open interest and CVD is potentially shorts, or even if you're into observing order flow and watching footprints, is watching large number of shorts open into this level of anywhere between 90 to 85 and watching those cells get passively absorbed by bids resting in the book. Okay, so volume, high volume kicking in this area, or large amount of shorts opening, but they can't push price further. That tells you that that could unwind back to the upside. Those shorts get trapped. Price unwinds back to the upside. Long start chasing momentum, and you get the momentum move back higher, at least back into the hundreds. Okay, so that's kind of the thought process as to what I'm looking for. Now, again, looking at the daily, I do like this zone here. Point number two is the fact that you've got these lows here. There's this low here, there's another low here, and there's another low here. Are we likely to retrace this wick? People start puking their positions, thinking they've caught the bottom. You swing fail these levels. One of these levels is going to get swing failed, and you're looking for consolidation and a move back up. That's kind of where I'd be looking for. Long story short, I just don't know exactly at which level, but that's essentially what I'm looking for. Now, the third point that I want to make is if I just clear my chart completely, go to the monthly, and if you just map out December's range, this is the range that I'd like to play. So looking for pivot points, looking for areas that I can get into position, into trade, and what's going to add confluence to the idea once I'm in position as to what's going to give me confluence that, okay, I can hold this long looking for higher prices, at least back up to the hundreds, 102, 104, 105, and so forth. Taking the December low to the December high, this is one aspect of a range. Now dropping back onto the weekly, you can see that we've got this wick at 90,000, and there's a probably candle, small candle wick here at 89. Okay, so again, let's just mark those levels out now. And we'll do that in green. Okay, we're green in the sense where levels that we're looking for swing fails or price to come and take out those swing lows, and looking for a reaction off that level with an invalidation point. Now let's go to the daily. So sorry, I think I referred to this as the weekly block. This is a daily block or a daily demand zone. I'm looking for price to give me a reaction from 1, 2, or 3 levels. 89, 90. Ideally not 92. I would like to see a cascade of liquidations, at least for those who are positioned in highly leveraged trades, or anybody who's piled in up at the highs and got trapped. They get out of position and price trades into this zone. Show me this, reclaim back above these swing points, invalidation at the low. If it's a deeper pushback into price, this is going to be my invalidation. It can swing fail this into 86, 85s, back above, invalidation, using this level as my trigger to get on board. Look for price to trade back into the mid-range. Range high, potential range low, potential mid-range. Looking for points of execution at one of these levels. Is that clear? I've not used anything else. I'm not looking at indicators. I'm just purely telling you that these are the levels where I'm looking for a reaction from price. I don't know exactly where, but as a trader, and something that I will cover in 2025, is for the last 4 years, I've heavily talked about the foundations of price action. What I want to do now moving into 2025 is talk about the finer nuances of trade execution, because I feel that's one subject that isn't covered very well. And it's not a dig at anybody. I just think a lot of traders don't really know their own execution game. It's just a fire and forget and hope shit sticks, basically, okay? But for me, if you understand trading and you're looking at risk profiles and risk to rewards, this does eventually matter, where you refine the trade, you refine the execution process. It gives you better points of confluence. You've got more control over your decision making. Sometimes you can have too much information flowing in, which can be counterproductive to your trading, but with experience, with time, you'll finally figure out what works for you, what strategies you wish to trade, and I will cover some of those strategies that you can take away and potentially trade. But for now, just keeping it very simple, high time frame inflection points where I'm looking to do business, okay? Now, the other way to do this, right, let's just assume for whatever reason, price comes and trades into this zone here, into this daily demand zone. What I've shown on previous streams, treat this as a range. There's the daily low, and you could potentially use the swing high on the candle body, or you could use the actual, the wick, or you could use the candle body. What am I going to do here? I'm just going to define a range. That's all I'm looking to do. So should price come into this level now, we've got a swing point, Are we going to take these out? There's no guarantee that we may not even get down there, right? But all I'm trying to emphasize on the point is, as a trader, where do I want to do business? Where do I feel that I can execute my strategy with a clear invalidation, understanding what price is doing, and look to execute and get into position of that trade? I don't care whether we're going to print a 3 drives to the high. I don't care whether we're going to see trend continuation. I need to give myself a chance for the trade to be successful, is understanding how I'm going to position, where I'm going to position, why am I positioning there, what do I need to see, and where am I wrong? And if I'm wrong, what's my plan B? At which point do I then step back into the trade? All right, so if for whatever reason, now if you've traded ranges, you understand everything I've taught about the concept of trading ranges, you can now drop onto the 4-hour time frame, looking for those finer nuance points, okay? Are we going to see a swing fail of these lows here, where price comes in, doesn't quite tag into the mid-level? It would be nice, because it would fill in all of this inefficiency. And if you look at where price reacted from previously, it was this level here. Price rallied, consolidated in this range, retested, and continue higher. This was the origin for the next leg up here. So if price does come into this zone here, you've got 2 possible points of confluence. You're either executing at 90 to 89 scale bids, or if you want to hit the trade from the backside and chase it up, that's fine. I personally prefer to execute at markets, get some position on, and then I do the rest with a limit chase, or I just continue building a position through market orders. Why market orders? Well, because the cost of doing business. If I have limits that aren't going to get filled, am I just going to sit out and miss what is a very good trade setup just for the sake of paying fees? No, I want to get into position. I can at least scale out of position when it comes to taking profit or cutting my losses. So the point is, if price does at some point push down into this level, it may not happen this week, it may not happen next week. We could essentially reverse from this level, push higher again, and then drop lower down. So that's all I'm bothered about. I want to see price essentially trade in this zone. Give me a trigger. Either we take out these lows here in some format, but we stop short of the mid. That's fine. Get back above 90 to 91. I'm in the long, stop at the mid. If it comes back on me, I can cut the trade, because at that point, it increases the probability that we could trade back down, potentially into 89 or potentially into 86s. So for me, 85, 86, 87, 88, 89, 90, or 90, 91, 92 are the three zones of execution. I'll be watching for price to come into those levels, and that's where I'll be looking to execute. Does that make sense? Has that helped you understand how I've mapped out a probable range that I can pivot off around from? These ranges, it's nothing magical. All it acts as is, where did price give me a reaction? There's my range high, there's my range low, there's my mid. Look at where price consolidated, swing failed, took out this level and rallied to the highs. I'm looking for 1, 2, 3 potential levels to get taken out. Back above, that's trigger 1. Goes deeper, take out these, fill in all this inefficiency into this demand zone here. That's good enough for me to take a trade, or pushes further down, pushes away. That's good enough for me to take a trade. Okay. 3 strike rule. I could have 3 attempts at this. Attempt number 1, it comes back, I cut it. Attempt number 2, it comes back, I cut it. Attempt number 3, it pushes away and I nail it. Okay. And then I can ride price back up to this mid range of 100 and potentially higher. Now you might ask me, for you, Exo, why don't you just scale in? Why not just have a third here, a third here, and a third here? Well, first things first, I already have my spot position, and I'm purely talking about trading. And I'm not talking about buying Bitcoin here for the next 12 months and watch it go to $300,000. I'm purely talking about from a trading perspective. If you watch my streams, it's geared around trading, and it should help you to take away everything that I've taught and implement it in your own system so that you can improve your own execution, improve your own ways of getting into position. Okay, that's the objective. I'm not telling you to buy Bitcoin and hold it here for the next 6 months. I'm just saying, look, this is where I've already got my spot position from 53, 54. I'm not concerned yet. I think that there's still plenty of price action to occur in this range. Where I will be concerned, if there is some, for whatever reason, if there's some geopolitical factor where we start breaking out of this range, then I have to get out of the trade. Then I'm going to take profit on my spot. Then I probably would be looking for a lower high and then a lower low. But that is, we're still a long, long way off that. But it's good to have that risk scenario in the back of your head, because when you already are aware of the plans, you're aware of the downside potential risks, you can act upon that information, as opposed to panicking and thinking, shit, what the fuck do? I didn't sell the tops. Do I hold it now and wait for a bounce? So just think logically, remove your emotion out of it and just ask yourself, what's the adverse scenario? And just be prepared. You don't have to hope it's going to happen. I'm not saying it's going to happen. I'm just saying be prepared that if it happens, then know what to look for. All right? But for now, I think in terms of expectations, when I look at this chart, I don't really see us breaking down too significantly lower than 85, 86, or I hope not. I still think there's significant time that we will probably spend at least a good portion trading in this zone here, okay, over the next several weeks at least. Now, the final point that I want to make before I move on, there's 2 more points that I want to make, is let me just see if I can bring something up. Bro, can you do chart analysis of XRP? No, I'm not going to do no chart analysis of XRP. Sorry, Akshay. Right, let's bring on the heat maps. Right, you look at this and tell me. So if you remember what I stated just a short while ago, this daily demand zone I think is going to be key for me, okay? This is going to be, if we trade this level, I definitely want to be looking to do business here. If we don't trade this level and we just push away, that's fine. I don't really fancy taking on a trade. Okay, and like I said, I'm already in the spot position from an average of 53, 54s. But if we trade this level, I'm looking to pay attention. And I also talked about the 12 weekly EMAs pushing into that 85, 86 level. The third factor of confluence that I want to talk about now is, look at this. This is Binance Futures. Yes, these are passive bids in the book, but look at the depth. Look at the highest node at 90,000, and look at the thickness of the resting bids in the book. So that's just on the futures part. Okay. So again, when you look at this across the line, and you just have to be watchful. Again, people will say, "Yeah, but this is bullshit because what if these get pulled on price nukes?" Obviously, that could happen, but that's just a retarded way of thinking about heat maps. What you really want to be looking for is, are these fuckers that are sat in the book, are their bids getting hit? Are they absorbing selling? Are shorts opening up at the lows? Are shorts going to get trapped? And if they're trapped and they can't push price down lower, and these bids are getting filled, and liquidations are coming in, then who do you think has the upper hand in the market? The ones who rest passively in the books, generally who can absorb price, absorb aggressive selling at these lows, are likely to find shorts get trapped. They get pushed offside. They're going to puke. Longs are going to chase. Late formers are going to pile in. That's why you get those fast moves back up again. And it's the same on the opposite side when it comes to shorting. So when you look at the book depth, when you look at this entire region here, if I can just zone this out, let's just use the daily chart. Okay, there's the daily level that I marked out. Okay, the first point of action there is at 90.8. The lower bounds of that daily candle is there. So somewhere in between there, between 86 and 90, 91s, you've got all this book depth here. Now let's go to the 4 hour. Okay, so again, just using factors of confluence. I don't care about open interest. I don't care about longs opening, shorts opening, on Velo data. I'll probably look at the footprints and look for stacked imbalances for those of you who are familiar with those. Shorts opening up, stacked imbalances. Once they're offside, it's time to go, okay? So again, even on the 4 hour chart, you've got this 4 hour demand zone, which has never really been retested. This zone here. And taking the mid of that, there's your range high, there's your mid, there's your low. Somewhere in there, looking for a reaction, that's this book depth over here, okay? From 90 to around about 87s, this part here. Now when you look at Binance, so that's futures, when you look at Binance Spot, look at the book depth there. You've got 90,000 again, a lot of interest. Okay, somebody's advertising or players are advertising a lot of interest at that 90,000 level. 93, 92, 91 gets very, very thick. All right, you can group it by 500 if you want more finer, granular a view of the books. You can see the supply side is very thin, right? But look at the depth into that demand zone. So another reason why I'm really looking to attack the market should we trade into these lows here. And at least looking to trade back into the hundreds, potentially up to 105s. We'll do the same on futures. We'll group it by 500. Look at that depth. Look at that. Look at all those bids resting there. Okay. What does this depth mean? It basically means orders in the book. Depth of market. DOM. Okay, so how many bids? If you've got a thick set of bids resting in the book, then it's going to take a lot. And if these are legitimate and they're not going to get pulled, then this is going to take a lot of selling pressure to get through here. Okay, and like people have said, yeah, but those bids could get pulled. So, well, like I said, you've got to observe volume. You've got to observe the amount of volume and whether those bids are being absorbed. There's ways to do that. We'll cover that in the new year as well. So that's kind of my high-level view on Bitcoin. And I've gone over the trade scenarios. I'm looking to do business at this zone. And that leads me on to the next point. The next point is, well, if Bitcoin is likely, you know, to just fuck around, mind my language, shouldn't really swear too much, but if Bitcoin is likely to just fuck around doing nothing here, I'm not interested. I want to trade the extremities of price. It's either at the range lows or it's either at the range highs. Trading this shit here is only going to get me chopped up. I'll probably long this thinking, yeah, I'm in profit, and it's going to come back down and take on a necessary loss, right? So I'm a very patient trader. I only want to trade my system, the best setups. And that's one of the reasons why when I put my balls on the line, you guys know that I don't, you know, put hindsight trades out there. I literally map up my ideas, and sometimes I share proof of, like, here's what price did, this is what I wanted, this is what we've got, this is where I've taken my trade. It's not to fucking seek clout. It's just to share with you guys that, look, I have a process and a system that works for me. It might not be for everybody, but this is just my way of trading. It's not the only way to trade. There's many different systems out there. And I'm only just going over what I know, okay? I don't really care about what other people are saying or what other people do. And the same should be for you guys. You guys should take, and girls, should take responsibility for your own decisions, for your own actions, your own setups. That's the only way you're going to learn. I never joined a paid group to feed off trade setups. I never ever did that, okay? The only time I joined a paid group was in 2017. And that was essentially because I hadn't got a clue what the fuck I was doing. Okay, I just saw people saying, buy this coin here, sell at target 1, target 2, target 3, target 4. And I used to think, how the fuck are they coming out with these targets? How do they know, like, where to take profit? What is it that they're doing? I had no clue about TA. I was purely a fundamentals guy. Oh, this project is good because they're building a layer 1 solution like Stratis or Lisk or Neo, Ant shares of China. This is going to be the next Ethereum. Buy. That was it. That was my... The first time I started doing TA was using fib retracements and using horizontals, but half my horizontals were just scattered everywhere. Meaningless levels that I used to think, all right, if price trades here, it should bounce, and half the time it never bounced. So eventually you get to a point where you recognize that it's not just about drawing SRs or horizontals, it's about demand zones. Understanding when price trades these levels is not just about trading these levels, what's happening under the surface. What's the positioning like? Are shorts opening? Are longs opening? Okay. What's the open interest? Are liquidations happening? And then devise a strategy of how you wish to execute the trade around the information flowing in real time. So based upon that, based upon all that waffle that I've just given you about my thought process, how I'm looking to trade this, and the reasons why, I've given you 3 reasons why I really like this level: the moving averages, the heat maps, and taking out these lows, and looking at previous structures, okay? Is that, what did I talk about on previous streams? That on Bitcoin, when you look at Bitcoin, when it rallies and it makes a correction, you often get rally, 1 to 3 weeks of corrective structure. Look at the wicks, 1, 2, 3, 4 wicks. This is indicative of buyers stepping into the market. This is what you want to see, hopefully, at this level here. So now if we've had a rally to the highs, is this the first week in a multi-week correction phase where price really takes off in January? It could be. We might just be building the base for trend continuation higher, or at least for price to trade the range highs. All right. But the key for all of this, like I said, stripping back everything that I said, if you want to keep it really simple, use the monthly high of December, use the monthly low of December. Let this be your foundation. Then drop onto the daily. You've got your daily demand zone. This is the zone where I've identified that I'd love to do my execution somewhere in here. What gives me a factor of confidence is reclaiming back above December's low. Anything in here is for executing trades back above the December low. If this is the December low, of course, it's yet to be established, then great. Okay, that's what I'm looking for. So just we still don't have the low of December because we don't know if price is going to trade lower the next week. But when it does, readjust your lines. If it trades outside and goes back inside, that's the range you want to play. Okay. Very, very simple. Put those lines on your chart and then see what happens after that. Move on to Ethereum. So if Bitcoin could potentially trade into 90s, what does that mean for Ethereum? I've already stated and made my intentions clear, right? On the timeline, we nailed the long to the upside. If you remember when I covered it on the heat maps that you want to see, I'm looking for longs. We longed into the highs, took profit. I didn't short, okay? I was considering shorting, looking at this perfect swing fail, but I didn't. I missed it, and that's fine, okay? So I've taken profit on my spot ETH. I've taken profit on my ETH perps position. I'm in no position on ETH. Sorry, I am in a position now because I bought this on whichever day it was. I think it was Friday that we came into here. So some of my bids got filled, and I stated that I've filled 33%. I'm looking for a rounded retest. It could stall, push up higher into this demand zone. It may push one leg higher here. Give me that. Give me this consolidation pattern. Breakout, trade higher. If Bitcoin trades lower, Ethereum will trade lower. Okay, that's all there really is to it. So if you can take the concepts and the principles that I've just covered on Bitcoin, and the key to the market for me is understanding Bitcoin. If you could, now, again, listening very carefully to this, if you can time the execution on Bitcoin, then you will time the execution on Ethereum, and you will also time the execution on any altcoins that you wish to position into. It all hinges off around Bitcoin. And I do believe now, looking at the market, that there is a structural shift in Bitcoin here. Trend up, trend continuation higher, breaks, a significant break of, local structure, okay? Significant break of local structure. So when you look at this now, when you look at the daily stock RSI, the 4 hour has room to go lower. The daily is at the lows. I never ever short the market when the daily is at the lows here, in possibly approaching into a demand zone. Now this could take 5, 6, 7, 8, 9, 10 days to resolve. It could hover around the lows before we get the rotation higher. This is what I'm watching for as price trades here to show me exhaustion of selling within this range-bound environment. So that's another factor of confluence. Then let's bring on the RSI. Again, look at the RSI. It's trading below 50. Are we likely to see candle, 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 candle up again? If we get a slow drift like this over the next week, just rotational up and down, choppy price action, nothing exciting happening, and then you get a final capitulation, quick bounce back up, and the RSI hovers into the lows whilst price is rotating and oscillating. That is another factor of confluence. With the stock RSI, with the daily RSI hovering towards its low, increases the probability that I'm looking for a long at this zone again, okay? What I really wouldn't want to see is price flash into this zone very quickly and then bounce away. If that happens, then I've got to chase it. I've got to be ready for it. I'd much rather see the oscillators reset. But the key for me isn't the 4 hour, isn't the daily, but instead it's the weekly. When you look at the weekly, this is what gives me a level of, I wouldn't say concern, but it's telling me to be slightly more patient and don't rush into looking for longs too aggressively, that I've got more time than I'd like, and the price is yet to resolve. Now, what I want to see in this scenario, when you look at the weekly stock RSI, what I really want to see is, if you recall what happened back here, when we made the highs on January the 8th, look at the pace of which the weekly stock RSI rolled over to the lows. It took literally 1, 2, 3, 4 weeks at the lows here before it reversed back up. When you see this at the lows and price coming into support and it's holding, and again, a large number of shorts open into this, we covered this on stream. We covered this exact setup. Me and orders and flow. Remember, if you remember watching the stream in January, this is the exact setup we talked about and the exact setup we traded, and it came to fruition. We got the move higher. Okay, So you want to watch for the stock RSI trend down very, very quickly over the coming weeks. That's what you want to see. I don't want to see this slowly drifting lower down week after week after week. I want to see a fast oscillation to the lows with the daily RSI, daily stock RSIs hovering at the lows. That is really going to increase the probability then for me to take advantage of that. And if you want a video on this, I never knew this, but Sam Seiden had created a video on how you can increase the probability of being right using oscillators. Let me just bring it up. It wasn't until several years later that, after playing around with this system, that I realized that, hey, there's already a video that exists for this.
What's the only thing that can make...
So it's, for those who are interested, it's this video here. If you are interested. Sam Seiden, supply and demand trading with mechanical oscillators. My version is more nuanced than his, but he gives you a high-level overview. Mine is far more nuanced than his because I look to trade the extremes or the extremities of a range, okay? And I rely more upon the higher time frame oscillators to give me those 1 to 2 to 3 high conviction trades in a month. That's what my system is based upon, okay? Not the lower time frames as such. So it's a fantastic video. People ask me for educational content. I refuse to create educational content because 1, I cannot be fucked. 2, there's plenty of educational content out there. 3, all you need is just somebody to show you what you need to go out there and learn. So that's what I try to do. I try to give you nuggets of videos or what to watch, what to learn from, where I, learned from and what consolidated my learning. You have to pay a price for your education, and the best education is having a system, screen time, journaling, okay? So again, let's get back to the charts, looking for an oscillation to the downside. Now, what if I'm wrong? Okay, what if I'm wrong? If you look at this structure here, look at the structure here. Rallies, significant sell-off, consolidation, significant sell-off, rip up. What if the RSI does this? You're looking for that slight drop, kink, and then back up again. Could happen, right? If you look at the way the characteristic, I know, and I've seen a lot of people talk about this price action here, but I think this is worth paying attention to as well. The significant sell-off into a demand zone, consolidates, drops lower, takes out all the lows into a level of SR, then pushes higher. What if we do get something similar to that? Where price consolidates, there's your weekly candle for this coming week. It's neither there or neither anywhere, and then you get the flush down, and then you get the move up higher. What if we get that? And the key for me is again, if the RSI hovers like this is what's going to give you this aggressive move higher. If the RSI oscillates to the low, then we're probably going to be range bound. If the RSI drops here and pushes up again, we're going to go much higher, in my opinion, to that 120s in January. That's where I'd be leaning towards. Probably end of January, mid to end of January. So the subtleties there. If we oscillate to the lows, then consolidation. If we just drop and bounce, sharp consolidation and continuation high. They're the 2 scenarios that I'm looking for. Okay, subtleties, absolute subtleties of oscillators and price. Now, again, if you want to add one final factor of confluence, is look at the weekly RSI. I still think there is room for this to trade into that 50 level. And if it does, and if price is at a level of demand, and we get this zone here, just as it did here, if you look at price back in the summertime, if the RSI trades into or close to that 50 level, and price trades into support, and the RSI is, the daily RSI is flattened out, the daily stock RSI is still oscillating at the lows, that's a trigger for me. because it's holding up and showing strength in the market. What you don't want to see is when the RSI breaks below the 50 level and then it can't reclaim back above and it trades even lower down. That leads you to your shift in trend, shift in structure. And like I said, the 12 and the 25 are fine. There's no concerns there. People are trying to be a hero and call the top. I've never fucking traded a top in their life before, so I don't know why people expect them to get it right. This is not, I'm not looking to short this market right now. I'm looking for longs here. All right. But when it comes to the new year, I will be shifting my bias. So in 2024, I was predominantly long. So I was looking for longs. I wasn't aggressively shorting. If I'm really honest, I think in 2025, you'll probably see me bring out the shorts more often. And I'm going to be looking to play both sides of the market more aggressively. In 2024, I've been playing longs aggressively, and I've rarely talked about shorting. The only time I've talked about shorting is hedging, okay? So in my honest opinion, I think given the level of uncertainty that we have, given the fact that inflation could be a problem next year, okay, we don't know yet. There's a lot to happen between now and then, but, you know, I think it may warrant me trading both sides of the market, such that if we trade above here and it swing fills, absolutely I'm going to short this, okay? Because that's my downside protection against my spot position. So we'll talk about this in 2025. And I won't hesitate, and I'm not afraid to talk about openly shorting the market either, okay? It's probably one of my strengths is shorting the market. So when I say strengths, I'm talking from a technical perspective, all right? So we've covered Ethereum, we've covered Bitcoin. Again, you can just take everything I've talked about with regards to Bitcoin, take those same principles and apply it to Ethereum, okay? So if you want to do some homework, if you want some exercise, instead of me talking about another 20, 30 minutes going over the same bullshit that I've just told you, go ahead and apply those same principles to Ethereum. So start off with the 1225 EMAs. That's the starting point, okay? So start off with the 1225s. What do we have? Well, Ethereum, if you look at that, it's essentially trading into the 12s and the 25s, okay? Into that mid zone. So if you're wondering why did XO figure to bid this level, why? Because one, it's a down candle before we had an up move. It was a consolidation before the up move. It was a mid level. And the fact that we had the 12 and the 25 EMAs there. This was a buy for me. It's as simple as that, okay? Took me 20 seconds to figure out when I looked at it. And I thought, yeah, I'm going to bid this level. Right, there's the demand. So, yes, we have a bear cross, okay? But again, what I'm looking for is a very short-lived period of red. So if you look at price, where price has broken down previously, it's going to take at least a week or two to build a base, okay? It's going to take a week or two to build some form of a base. And then with the weekly intact, and the daily flips bullish again, it's time to trade it higher as far as I'm concerned, okay? So again, if we do get that level of compression, and then you can probably get like a trend line going there. The bands are going to come down, curl around. You get the shift. That's your shift in structure. We should see that move higher, okay? And if you look at this from a high time frame perspective, okay, if you look at this from a 3D perspective, let's just go for a clear chart. What if this is... Anybody know what I'm going to do next? Any guesses? Can you see it happening? Can you see it coming? What's the next thing I'm going to draw? Do you see it? What if? Right? What if? Again, not something I explicitly trade, just something that may add to my bias in terms of a factor of confluence. It's not an Adam and Eve. Okay, so inverse head and shoulders. And if it is, then you want to see consolidation. And this is why I said I don't want to see price close below 2,900. There's 2,900. Give me that base there, okay? There's my baseline. There's my next SR level. There's the highs. Give me this to build a position. And let's at least take it back to the highs and then the all-time highs here, okay? So let's quickly just do that in terms of a macro range. There's my range highs. There's my macro range lows, you could say. We've got a mid-level at where? Where do we have the mid? It's right there. It's right there, guys. I couldn't ask for a cleaner level. And again, why I've emphasized on why 2900 is the level for me, okay? Give or take. So if you want your factors of confluence, there you go. There's another reason there. That's the highs. You probably get a range quarter there, okay? So I hope that makes sense. It took me the best part of 30 seconds to figure out with the confluence of the 1225 weekly or 1225, whatever it was, daily, weekly, can't remember. But you get the gist, okay? You want to see this. The smiley face that I draw, you want to see this hold as the level, okay? Give me this and let's trade it back up. 1, 2, 3, 4 tests of the highs. I'll see you up there, okay? Break below here. We're in for some shit. We're in for some serious shit if we break this, okay? Much, much longer, larger corrective phase is going to be required. Right, Solana. So if Bitcoin is coming down, let's just assume Bitcoin trades lower and Solana trades lower. Can you see exactly where I want to do my business on Solana? Initially, it was this. I never got the trigger because Bitcoin was breaking down. So where's the origin of this move up? It's this demand zone here. This is the 3-day level. When you go to the daily chart, it's a daily level. So you've got the 3-day and the daily. If you go to the stock RSI on here, you've got the, you have the daily at the lows. Okay, so if you're shorting this, you're shorting this. If you go to the 3-day, it's at the lows. If you go to the weekly, it's halfway down here. Now is not the time to short this shit. And if you recall what I said, it's essentially, what if we, fucking hell, this pen is pissing me off. What if we get something similar to this? Look at this structure here. How easy would it have been to become bearish at this point in the market? Oh no, price is breaking down. Fucking hell, look at all this inefficiency. The next logical level of support is down at $67 after trading 200, right? And then when you go to the 4-hour chart, well, guess what? Look at this. From September all the way through to the end of September, and probably, and some as well, right? And some time after that. So you got this demand zone here. We've just retested this demand zone. This would have been a good trigger, right? Into this zone here. Anything in here is worth executing. Give me another pullback. Break the trend line. That's continuation higher. There you go. That would have been another trigger there. All right. No, well, hindsight, but I didn't know that it was going to do that. That's another point of execution. Push back above. Okay, and you get some form of a trade here. Back to the highs. Take profit if you want. Okay? And when it does something like this, this is essentially where I would take profit. I wouldn't be holding this thinking, yeah, we're going to go much higher. Why? Because I want to lock in my gains. Why do you think I've done that? Why do you think I've locked in my gains here? If I've longed this, why do you think I've locked in my gains when I stop here? Why do you think that is? And the reason I'm asking is because I'm trying to make you think about, it's not just about, oh, level to level, matey, you're becoming a level to level trader. Your primary objective, whether you're an investor or whether you're a trader, if you're a long-term investor and you think Solana's going to $1,000 in 6 years, log off. There's nothing here for you to learn. But if you want to learn how to trade and learn how to read markets, learn how to read price action, then my question is simple. Why am I taking profit at this level? Exactly. I can re-enter. Well done, Heather. You can enter on a clean reclaim. Okay. I've taken profit here. It's into a level of resistance. Can you tell me, whoever's reading, whoever's in the chat, can you tell me for a fact that price is going to go to $300 from here? Just ignore the timeline, ignore the time series or the fact that this is a hindsight example. Can you tell me for a fact, with certainty, that price is going to go to $300, just like people were calling for it back in 2021? No. And can you tell me for certain that price is going to come here? No, you can't. But what I've done is taken the trade, locked in my profit. Now all I'm doing is one of two scenarios. Reclaim back above there, hold, I'm long in it, okay? If I long and it fills back inside, cut the fucking long, short, all the way back down. Right? Still no trigger, still no pullback. It didn't even come into the mid-level for me there. Okay? But the fact is, we already have a swing fill. That's the reason for me to get out of that trade. Now I can step back in. But when you look at this, let me just see if I can delete the markings. When you look at this structure, right? When I see this, I'm thinking, all right, how much higher can this go up? I'm really shitting my pants now. If I had significant size on this, I'd be crapping my pants, because I think to myself, well, fucking hell, how much higher can this go before it comes crashing back down again? Look at all this inefficient move. Correction, rally higher. And do we even have a divergence here, is what I'm thinking. Right? So I'm long at this point, and I'm thinking, where am I wrong? Look at the RSI. That's bearish divergence. So where do you think I'm going to execute? Where do you think I'm going to get out the trade now at this point? If I've longed above here, looking to play a trend continuation higher, where do you think I'm going to get out the trade, and where do you think I'm going to short it? And I remember taking this trade. I was one of the few guys that shorted Solana at 200s, and I called for $20, $30, and I got a lot of shit for it. Okay, but I was right in the end. I might have fucked up buying Solana at the lows because I was supposed to buy $10, $12. Yeah, I put my hands up. I fucked up. It happens. I'm just human, right? But the point is, I can always get back into a trade, even if I miss the macro lows, which is what people obsess about. Oh, you missed the lows on Solana, you missed the lows on Bitcoin. Doesn't matter to me. I can always get into a trade. So if you see something like this, again, this isn't just about Solana. This is general, the thought process. I took profit here. I can get back into a long. If I had a deeper pullback into this level, I would have longed this and then gone higher, okay? I didn't have anything to action. But the fact is, I can long above here. If this breaks down, I've got to get the fuck out. And then I'm asking myself, is this just a deviation on a higher time frame? This was in September. This is in November. What is this about all of a sudden? It's tested support. It's bounced off it. I've got to get out of the market. I'm now thinking, all right, back in the range. I'll see you down at 120s. Invalidation at the highs. Short on this, and if we get another push up like this, if I'm already short, and I did short this, but if we get a push up here, I'll cut my short. Give me that. I'll step back in again into this supply zone, or I can short this here with a stop there. Trade back down into here. That is how I nail my tops. Look at that. It actually did push up, right? Pushed up, slammed into that supply zone, rejected. That's the short trigger. Twice it's tried to break above the range highs. See you down there. Takes time. Markets take time when they bleed, but we get there eventually. So that's the thought process, that the reasoning why when you see retards on Twitter say, oh, you're going to miss out, we're going so much fucking higher, you took profit at the highs, you pussy. Not really. I won't be the person who's going to eat shit on the way down. And I refuse to do that because I did that in 2018. I suffered significant drawdown in 2018, okay? I was that guy who went from 5-6 Bitcoins to over 100 Bitcoins in 2017 into 2018, and I pissed away something like 40-50 Bitcoins on the way down. Why? Because I was overexposed to altcoins. I had no concept of downside risk. I was one of those guys that said, nope, it's going to go higher. Anybody who criticized Bitcoin or called for Bitcoin going to 10K, 5K, I was that guy who would troll that person, okay? Say, no, you don't know what the fuck you're talking about. It's going to go higher, okay? But, you know, you learn, and everybody makes mistakes, but every mistake is a learning opportunity, and that's how you shouldn't be too harsh on yourself, because markets are very, very difficult to trade. So long story short, back to where we are in the current time in terms of Solana. I really like this level here. I know we are back in the range of this range here, but for me, look, ultimately, You could say we've traded the highs. This, as far as I'm concerned, is the top in? I don't know. It could be, but I'm going to give myself a chance that I think this is more of an aggressive sell-off into this SR zone here, around about 160, 180. That's where I want to do my business, consolidate, at least give me a push up back into the supply zone. You know, I can take some profit, and if it goes higher, then great. And what if that's all we get at 300? What if this is 1, 2, 3 drives to the high, and then we get a deeper correction all the way back down? Okay, at the end of Q1, what if we get 400, 350, 400, and that's it? I don't know, but there's no point in me talking about what if, because it's not actionable right now. All that's actionable is where are we? Where is price? What do I need to see? We've got a 3-day demand zone down here at 165s. We've got a daily demand zone here at 165s. We've got let's have a look at it. We've got a weekly demand zone here from 170 to 162. It's the start, okay? It's the start of a demand zone. It's the start of identifying where I can potentially do some business. And if you look at the weekly 12 and 25s, we're into that level now here. So you don't mind price trading below the 1225, because like I said, it can trade below it and compress under it. It doesn't mean it's bearish, because once it gets back above, it flies back up to the upside again, okay? If you look at the daily, yeah, the daily looks shit. It needs to consolidate at this level here. It needs to do something like this and then continuation higher. That's the trend continuation play that I'd be looking for, right? So total, let's have a look at total 2. So we'll spend 10 more minutes and then we'll just call it a day, okay? Total 2, this was the SR level that I mapped out on charts, on the timeline. On previous streams, we've traded into there. This is the zone that I'd like to see hold now. Okay, if we are going to see continuation higher, that's the zone where I'm looking to do business and time my execution on altcoins, okay, to go higher again. Take this out. Take this out here, okay? And if I'm going to short the market, it's going to be one of two scenarios. If we trade higher, and we start breaking down, and we bounce, and we break down, that will be it for me. I think I'll have to start executing shorts, okay? If that happens. We might not even get there. Nothing's guaranteed, okay? Total 3, very quickly. Straight into that demand zone that I've wanted, okay? There's my range low. Look, keeping it very simple. Range low to the range high into the mid. Essentially what Ethereum did, okay? So if we get to the 0.618, that's a good level for me. I like that. I like that level there. The 0.618, we are trading essentially this zone here. That's what I want to see hold. Okay, so again, should price drop into this over the coming weeks as a corrective move? Look at this. Remember what I said about Bitcoin, about 1, 2, 3, 4 weeks of correction? Well, you got 1, 2 down candles. If we get a third and we get a fourth and it wicks back up, look at the wicks. That's a sign for continuation higher, or at least into the highs there, okay? And then we've got others, which look slightly shitter, but then what do you expect when these are based more towards a whole lot of shit in the market? Okay, so these are slightly more higher beta, but I think for this one I'd have to give it more room down into this level here, because if you look at previously, this was support, rallied higher, got below, broke down. So you want to see this hold. You really don't want to see price get below here, otherwise we are in deep shit as far as I'm concerned. So consolidation. And this is how I time it with my altcoins, okay? So if I see confluence on Ethereum, Bitcoin, then something like TIA, I'll get back into position and look for the long. So if you look at TIA now, back into a demand zone. If you missed out and you were sidelined, then I'm certainly thinking about a position. I get to trade this all over again. You know, I dollar cost average in at around about 450s, from low 4s, 450s. I took some profit here. I round trip the rest, okay? I round trip the rest back at my, almost back at my entry. Sometimes it happens. It's just the nature of the game. I really thought we would have pushed up into the 12s and we didn't. And this is a reflection of the tweet that I made, that I'm actually better off just trading this market. It is a difficult market to trade. It's not been an easy one-way ride up. And sometimes you just think, fucking hell, I should have just taken profit, taken it from one level to the next. And what would that have what that would have looked like? Range high or local range. Well, there's your macro range high, there's your mid, there's your local macro range lows here at the bottom, right? So what do you think I'm going to do next? Just divide it in half. There's my mid range. I should have, if I was truly trading this from a technical perspective and not just holding spot because I think the market's going to go higher, which I think it will. Okay, unfortunately, we've had a fairly hefty correction. I should have got the fuck out under here. When I saw price stalling at these highs, the minute we get back inside, I could have put a stop loss there. I would have got rattled. And I guess what? I get to buy the lows. But I'm just a trader. I'm just a human being. I will sometimes make decisions that don't play out. It's just the nature of the game. But I haven't lost anything in this instance. I'm close. Well, not close. My dollar cost price is 450. But what it does give me now is I'm looking at the market and thinking, right, this really should have traded $12 for me. I get to rebuild a position again. I get to assess whether I want to cut this, whether I want to shift into something else. But if I am looking to trade this, then can this at least give me a move back up into $12 at some point between February and March? Maybe we spend the best part of January and December just doing something like this. Build in a range, get that break out the range. Second time around, then we go for this $12 range, okay? That at $4, 4 to 12, you know, 200%, 300%, 3x, whatever you want to call it. All right, so that's pretty much it from me. In all honesty, this is the last stream of the year from me as well. Bitcoin dominance, I think this is going to be the key, whether you're going to see alt season or alts rallying. You really want to see Bitcoin dominance come off. And could it be the case where, right, I'll leave you on this final note. 3 things to think about. Could it be the case where Bitcoin trades into this zone here? And then what Bitcoin does is essentially trade in a range for several weeks. Can we hopefully see some strength on ETH BTC? Are we likely to make one more low on ETH BTC here? Or is this a higher low? If it's one more low, then alts are going to feel that. If it's a higher low, whilst Bitcoin is trading lower, then I think we do trade back up into this level here. Can this potentially happen whilst Bitcoin is in a range-bound environment for the best part of the next several weeks? Go back to December 2017. Look at what Bitcoin did. And this is the final thing I'm gonna finish up on. Going to finish off on this note, okay? Bitcoin in 2017 topped out at nearly $20,000. 17th of December. What happened thereafter? Almost a week later, it traded down into 11,000. 50% wiped off the value of Bitcoin. And then it bounced into January. When you look at something like Neo, this was it. When you look at something like Neo, and you map out the 17th of December, and Bitcoin sold off, this is what Neo did. It retested the previous high and then it just took off. In 3 weeks, it was up at $190 from the lows of 30 in 3 weeks, whilst Bitcoin was ranging. So the best case scenario for me would be Bitcoin ranges and alts just take off. It's a big ask, but it could happen. Okay, just be open to that possibility. So my big question, which I don't have the answer to, and we'll find out in due course, is it truly 2017 all over again? I don't know. All right, and that's it. I'm going to leave you on that note. So just watch out for ETH BTC, watch for Bitcoin, and then keep an eye on Bitcoin dominance. If that starts falling off and Bitcoin holds the support and Ethereum catches a bid, then I think there's a decent chance alts could run into January, and we'll also have the yearly open. So my next stream is likely to be on, I'll see you in the new year, it's probably going to be on Thursday the 2nd of January, because we'll let the yearly open happen. Let's see what price does, and then we'll talk about the yearly open strategy that I've used every single year. All right, but I hope you've enjoyed today's stream. I hope you found it educational. An insight into how I think about markets and an insight into looking at risk scenarios. Should altcoins rally, I give you an example of how I look to get out of the market if there's a swing fail at a macro high. We've covered Bitcoin long scenarios. We've covered Ethereum long scenarios. The key to all of this is watching Bitcoin over the coming weeks. Okay, time your execution on Bitcoin, or if you're looking to pick up altcoins, look for those altcoins with strength whilst Bitcoin is correcting, and hopefully those altcoins will then take off once Bitcoin catches a bid and starts trading or oscillating back towards the mid-range and the range highs. But apart from that, I wish you all a fantastic Christmas. For those of you who celebrate Christmas, I'll be spending some much needed time moving, family time. I'll be doing my journal, and I'll probably be trading in the shadows if I get my setups. But apart from that, everybody, God bless. Have a brilliant week ahead, and I'll catch you in the new year. Take care. Peace out.